Hello traders, the title of the video is how to use Elliott wave strategies to trade a heavyweight financial instrument. The financial instrument that we are analyzing today is Alibaba Group Holding. This is a Chinese stock, alright. Also listed on the S&P 500, alright. Alibaba Group Holding Ltd, EPIC, BABA, Bravo Alpha, alright. So I'm on a monthly chart as always. We are recording this video today because an Elliott wave trader, PMC LLC, did ask me a few months ago, thank you for your patience, by the way, alright, thank you for your patience, did ask me to review this financial instrument. So I was checking it first on TradingView and also on TC2000, and they all have a similar data. That's why I switched to TC2000 because I'm more fluent using TC2000 than the TradingView. Though I like the TradingView also, I'm still learning more about the TradingView. All right. So is that all we have? All right, let me know in the comment section because I check everything now, all the Alibaba data on TradingView. They all have data from 2014, so probably they are listed up from 2014. If that is the case, you see this move also. If if this is true that the stock was listed this year 2014 somewhere there, and it bounced up here and come down all the way to the 138. See, this is the 138.0. The same Fibonacci retracement, reverse. So you may be wondering what is a Fibonacci extension reverse. If you ask that question, it means that you need to go to www.24elliottwaves.com, check what we call the irregular fast wave, IRREGULAR, irregular fast wave. What? So very often when you see a stock listed very, very new, all right, you can play this game of the irregular fast wave. It's powerful. So check that webpage, please. All right. So what we have here, if the stock was listed in 2014, and this thing happened, bringing the price to, you see this level here, this one, okay, of 138.0, because I do not use 138.2, all right. Fibonacci retracement of this move up. Now, the price move that we see here all the way up here, that is subdivided into 5, we will call it an irregular fast wave or an irregular multi-wave or an irregular impulse wave. So very often, the irregular fast wave is subdivided into 5. It's usually an extended fast wave. All right. So I'm not going to dwell on this topic of irregular fast wave because we want to analyze Alibaba stock. If you want to know more, go to www.24elliottwaves.com and check it out. Okay. So this move here. So we have first wave. All right. Do you agree or disagree? Second wave. And the third wave, followed by a very shallow fourth wave, and the fifth wave, not too long, very much. Okay. Anytime we count 1, 2, 3, 4, 5, it becomes 1. That's the red one here. That's the red one. That's what I'm talking about. Irregular fast wave, irregular impulse wave, irregular trending first, irregular multi-wave. After that, now we see the price coming down. So this is a very interesting scenario here. After the trending fair, the price came down 1, 2, 3. Very interesting. So whenever we have a trending fair, and I see something that is a clean cut. Do you like that phrase? Clean cut. 1, 2, 3. The first thing that is coming to my mind is what? flat correction. Doesn't mean that definitely we're going to have a flat correction, but that is the first thing that is coming to my mind. All right? If we will have a flat correction, so maybe we will have again a distinctive 1, 2, 3 again. I like more the expanded flat correction. That will be beautiful. 1, 2, 3, 1, 2, 3. Bringing the price. If it's going to be an expanded flat correction, the B way will go to 138.2%. Fibonacci extension level of what? The fifth wave. Here to here, you apply Fibonacci extension. That's the 138.0. Is he going to do that? Maybe. He may not do it at all. So some trader may say, George, you just said to me, definitely we're going to have a flat correction. Thank you very much, George. I don't need to watch the full length for this tutorial. Please don't think that way. All right, don't think that way, please. All right, that's one scenario. The price can come out with, even here, we can have a triangle. After that, we may count out 1, 2, 3, and then go 1, 2, 3, and then 1, 2, 3, and then 1, 2, 3, and then 1, 2, 3. And you say, Joe, you say it's a flat correction. Now we have a triangle. You are useless Elliott way trader. One step at a time, please. Okay? Don't assume anything. All right? So it's a trending first. If I have enough data, otherwise we are talking about speculative Elliott way come completely. All right, and okay, we just flow with the price because it can be challenging from this point onward. All right, so. What can we say to traders? All right, what can we say to traders? If our weight count is correct, now you may say to me, Joe, you didn't go into the mind of other traders. Now, when I look at this chart, I don't see any other way other traders may see it. So that's why we don't talk about other traders. The next thing that you need to do, place a pitchfork on your chart. Okay, so there is this low of the month of February 2016. Connected with the high of the month of September 2016, and you connect with the low of the month of December 2016. With those 3 points, you draw your pitchfork tool. That's the trend, that's the path that the price was taking before. Now it's out of it. So that's why we can talk about correction. So next thing that you need to do is to measure the width of that pitchfork tool, which I've already done, project in the direction of the price. As I did that, you can see that it's bringing us here. This is about market geometry. Now, it came out again out of that channel. We project it one more time, bringing us here on the edge. So here we have, using the width of the first picture tool. Okay, now we are here. We are projecting it. Drawing lines that are parallel to the pitchfork tool. Okay? So draw all those lines on the chart. Now, as you can see now, I draw the median line of the first projected channel. You can see that, that's the median line. And we are now at what? PMCLLC. I believe you are quite good as a trader, because you are very interested in the topic of a predictive fractal pattern. I know that. I can read your mind. Okay? We are at a hot spot trading zone. Because of the intersection between the media line of that projected channel and these key levels at 18952. So, what should I say to you? Priority to bullish signal, above 18952, and prior to bearish signal below 18952. That's it. That's the line there. That's the, if you are day trading, all right, or you are swing trading, this is what you need to take into consideration at this junction. Very, very important. So we have done our Elliott wave analysis. Now what we are doing, we are mapping out the chart. Now, also, we are trying to find trading opportunity on the edge. That's the only way. Those are the correct steps to follow to get paid. All right. Instead of just saying, oh, it's going to come down like this, and then you just sell, and then it go up like this, forming a flat correction, and then the price may print something completely different. So, though we have an expectation, flat correction, triangle, zigzag, anything else, all right, can form a zigzag, blah, 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 all right. So something, let me see, it's 1, 2, 3, 4, 5. It's going to be zigzag. We will see. All right, so priority to bullish signal above 18952, prior to bear signal below that level, okay? All right, that's what we can say at this junction. Very simple, very simple. So it's quite easy though, it's quite easy wave counts. This is not complex at all. Do you disagree? Do you agree? Let me know in the comment section. The only disagreement may be, George, or this is just, okay, first wave, blah, 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 blah. First wave, so divided into 5, okay? Or some trader may say, oh, the fifth wave is here. All right. So they may say, okay, if we end in there, and it's a correction. No big difference, so. All right. Can we draw another pitchfork tool? Okay, let's try this one. Let's try this one. Because the idea at this point in time is to follow the price closely, especially if you have a trending phase. For I see this pitchfork tool at this junction now is not useful to me, so I will not leave it on my chart. All right. Another thing that we can do, talking about preparation, mapping on the chart, we apply Fibonacci retracement to the trending phase. These are just preparation that we do because we want to get paid. And if you want to get paid, we want to find the best trading setup. All right. So what I'm doing now, I apply Fibonacci retracement from the bottom of the first wave to the top of the fifth wave. And I'm highlighting which level? You know it. Very good. The sweet spot zone. Excellent. You see? You are no more an ordinary trader. That's what I'm saying to you. By the time you know, you start competing with the best trader out there. So price came down, touched the top of the sweet spot zone, bounce up a bit. That's retesting the edge of what? The first projected channel. Am I correct? No. Retesting the edge or the median line or the first projected channel. So this is what I like to call the crunch. Okay? We are at a hot spot trading zone. Anything is possible from it. I don't want to talk too much. I know PMCLLC like a short tutorial, like many other traders out there, but it's not good for my channel, short videos, because we want to have a longer watch time. All right, that's it. All right, so that's what we need to do. That's what we need. So another thing that we can talk about is to connect the low of the first wave, what we call primary trend line. Have you watched those videos? Primary trend line. So then you're with trader, you just do them automatically. You connect the low of the first wave and the low of the second wave. That trend line, that's what we call the primary trend line. Very, very important trend line. See how the price came? Hit it. First reaction, you see people bought it here. As an Elliott trader, you need to understand that and take advantage of those trades that usually take place on the edge of the primary trend line. So that trend line will be there. So if you start pulling back, all right, you must watch that primary trend line before the edge of the second projected channel. Also, remember to draw the median line of the second projected channel right there. All in all, at this junction, as I said to you now, we have finished with our Elliott wave analysis. Now we are mapping at this chart, looking for trading opportunity on the edge. And when we see a trading opportunity on the edge, what's the next step? You get it right. Use a different time frame trading method. Can you see the moving at 50? That's the orange line there. The price pull back to the moving at 50 on the edge. Or moving at 50. on the edge also, right there. Intersection between a moving average and a trend line is what? A hot spot trading zone. All right. Okay. This is what's going on now. This is what's going on all over the place. All right. It makes sense. So because if we did analyze this before, we would have connected. We would have connected the high of the first wave and the high of the third wave to forecast the end of the fifth wave. It's also a very important trend line. Can you see that? PMCLLC, can you see that? Connecting the high of the first wave and the high of the third wave did help to forecast the end of the fifth wave. Look where it stopped the fifth wave, on the edge. What's going on? Now, between those two, it's becoming very interesting now, and the video is getting longer now. You see, between that blue trend line there and that primary trend line, we can also draw a line that is going through the middle, the median line between the angle of those two blue trend lines. But I don't want to draw it now because of too many trend lines here. I'm getting a bit excited, but I don't want the video to be too long. Okay, you get it now. So now this is Friday. We have a bit of resistance there on the daily chart price gap up. They say, bring it to the edge. Sometimes they may say, oh, definitely it's going to go down. No. Do you see any signal yet? I haven't seen one. The common central line is not broken yet. But sometimes they may say, okay, we can use a candlestick bar. Okay, if you want to play with candlestick bar, that's a leading indicator. You can play with a candlestick bar. If you want to trade it carefully, you have a doji and a bearish candlestick bar there. It's looking a little bit bearish. If you are playing it at that stage like that, be gentle. All right, be gentle. All right. Candlestick bar can help one to enter the trade at early stage. So now I'm on the hourly time frame. So it's hanging there. People will say, oh, this is the island pattern. Joe, you promised that you will record a video about the island pattern. There's one here, George. So we have a triangle and it's popping out here. Are you going to jump on it and sell it? If you are doing so, control the risk carefully. All right, and know that if they take you out, it was a speculative trade. So it's close below that triangle on the hourly time frame. But on a daily chart, we haven't seen any signal yet. So if I want to play this today, I will play it as a day trader, taking a very careful decisions. Okay, was in a triangle here, come out of the triangle. All right, so the price does not go up or down for no reason. It's always going to a specific target level, talking about the market principle. If it continues to go down, the target on the hourly time frame, I repeat, on the hourly time frame, will be 179.57. Midpoint target will be somewhere there. Some trader will say, thank you so much, Joe. Definitely it's going to go down now. No. Use a different time frame trading method to time the market. All right. It's always good. It helps to control the risk. It helps to avoid losing. All right. Instead of sometime. But if you know how to handle risky trade, it's up to you. So I finished to say everything that I need to say about Alibaba, excellent stock. And instead of stopping at 50 minutes by policy traders, we push it to 20 minutes now. So this will conclude our discussion today about how to use Elliott strategies to trade a heavyweight financial instrument. The heavyweight financial instrument that we are analyzing today is Alibaba Group Holding Ltd, Epic BA Bravo Alpha. If this video has been truly useful to you, please let us know by giving us a beautiful thumbs up. If you dislike it, be sure to mark it down, all right? If you think it's an essential tutorial that can help other Elliott traders, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. All right, sometimes I'm posting video first on Facebook. My Facebook page is Stochastic-MACD. Subscribe to my YouTube channel today. My YouTube channel is 24 Elliott Waves. Be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about how to use Elliott wave strategies to trade a heavyweight financial instrument. If you want to learn more about Elliott wave trading, go to www.24elliottwaves.com. Thank you for watching, and I will speak to you soon. Thank you, PMLLC. Thank you to you all.